Although megacap stocks like Amazon, Alphabet, Nvidia, and Microsoft have dominated performance-wise, lest we forget, all of these companies were at one time mid and small cap stocks. Today's audience requested ETF Battles, a quadruple header between ETFs tracking this group of young upcomers. It's ETFs from Invesco versus Vanguard. Stick around. I'm Ron DeLegge, and this is ETF Battles. Great to see you again. The ETF matchups that we do, by the way, on this program come from you, the audience. And so if you think there's a battle contest that we should do, well, send me your ETF ticker symbols in the comment section below or on our X feed at ETF Guide. We could do double, triple, and quadruple headers, so make it good. Be sure while you're down there to visit the description section. I've got links to our program judges. Be sure to get in touch. We've also got a link to our program sponsor, Direction. And finally, we've got lots of goodies down there, viewer resources with download links to free audio and ebooks, so don't miss it. Today's audience requested contest is a quadruple header between 4 ETFs from Invesco and Vanguard. And if I had to classify this matchup, I'd say it's an equal weight, small to mid capish ETF contest. It's from KEP 19901, who sent us this. Thank you so much, Kep. And you've sent us a number of excellent matchup requests, and so keep up the good work. Thank you again, Kep, for that. Judging today's contest are two of the top minds in the ETF marketplace. We've got Athanasios with Bloomberg Intelligence and Mike Akins with ETF Action. Judges, great to see you again. Welcome back to ETF Battles.
Great to be here, Ron.
Yeah, thanks for having me on.
So we've got our 4 battle categories: cost, exposure, strategy, performance, and mystery. Mystery, of course, is where our judges can give us that surprise factor or thing that they feel is crucial to today's contest. I'll be keeping score, and at the end of the show, we'll declare an overall winner. Keep in mind, none of the battle outcomes that we ever do on this program are predetermined or known in advance by myself or our judges. The first category is cost. Mike, please get us started.
Yeah, so anytime you run up against a couple Vanguard ETFs, this one being VXF and VO, VXF being the extended market, VO being midcap, it's going to be tough to compete on a cost perspective. That being said, both the Invesco products are very reasonably priced at 20 basis points and 25 basis points for EQAL and XMHQ, respectively. They all have solid liquidity. The Vanguard funds trade a little bit more, so a little smaller spreads, but they're all very efficient vehicles, both from a cost and liquidity perspective. But if you're looking for a winner, the Vanguard products are going to be tough to beat. And I give both the winner to VO, which is the cheapest at 0.04, but essentially VXF at 0.06 is right there. So the 2 Vanguard products are my winner in this category.
That's a strong start. Thank you, Mike. Athan, you're up next. How do you see it when it comes to cost?
I feel like Mike almost said word for word what I was going to say, but I think they're all great deals for even, the most expensive one at 30 basis points, 31, for what you're getting in the strategy, which we'll get into, I think is still very, very reasonable. 6 and 4 in the Vanguard, obviously very cheap, all decent size assets. I think the smallest of the group is EQAL, has just over 500 million, which is still really impressive for that fund. But they're all really big funds, a lot of liquidity, really cheap. So I think they're all pretty great. But I think just have to give the edge to VO, Vanguard. I think for that exposure, again, broad exposure to mid caps and whatnot, it's a pretty good deal for 4 basis points. So VO.
Exposure strategies, our next category. So Athan, break it down for us. How do these 4 ETFs compare?
As where it gets interesting, so we'll start with VXF, which is basically just the extended market. So essentially what it does, it takes like the whole S&P spectrum, large, mid, and small, gets rid of the large. So you just have the mid and the small left over. So it's basically meant to tack on to the S&P 500. XMHQ, which is small cap quality. This is kind of the only one in the group really that's kind of focusing on a smart beta factor like quality. So it has about 80 stocks. It's using a combination of quality metrics to pick the stocks. VO is just the crispy, which is what Vanguard likes to use for the index providers, mid-cap ETFs. You do, just because of the differences in how they define mid-caps, you do get some overlap with the S&P 500, about 15 to 20%. And that will be also in the S&P. And then EQAL AAL is just the Russell 1000 equal weighted. So in a way, that's basically like a bet on the size factor. You do get some overlap with the S&P, but that's just basically equal weighting all the stocks. I mean, I guess the main thing about the exposure is you're going to get some tech, but a little bit less. Most of them tend to be pretty heavy industrials, which I like. I like as a complement by sort of diversifying your sector exposure. Obviously, with the S&P, between tech and comm, you're getting a third of your portfolio in one of those. It's nice to sort of get a little bit of some little bit more diversification in the sector. So you do end up getting more in financials and industrials. I know it's a lot, so that was a lot to take in, but the one that I really like, just because of its uniqueness, and I'm a big fan of the quality factor. I like the Invesco S&P Midcap quality. I like that it has a screen. I like that it's a little bit more concentrated. I think quality is an interesting play. Also, I think where we are just in the markets. So in terms of the uniqueness from this group and the fact that I like quality, I'm going to give it to the Invesco product XMHQ.
Mike, you're up next for exposure strategy. How do you see it?
Yeah, I mean, I think this is a great, whatever viewer put this battle in, I think they did a great job of finding like ETFs to compare. I don't always say that, so kudos to you. We do this thing at ETF Action we call Derived Analytics. It's 100% rules-based classification assignment and factor ratings. And if you look across these funds, they're going to look very, very similar. They're all U.S. products. They're all mid-cap. From a size assignment, they're all core, meaning they don't have an overweight to value or growth stocks on a style basis. They all have a core style assignment. So if you really kind of look through that, they're very similar on the surface. But then, as Athan did an excellent job pointing out, once you get under the hood, they start having some significant changes. Obviously, the two biggest things being the market cap weight for VXF, the Vanguard products, and VO is going to have a huge effect. You're going to be overweight to those larger names within the mid-cap, small-cap space, whereas the Invesco equal weight is just that. It's an equal weight strategy. It's tiered to some degree, but it's an equal weight strategy. That's the one that I would say is the least in this group. I would actually think of that more like an RSP product, which is a large cap product that, but because of its weighting, tends to look mid cap, but really it's owning large cap names mostly. So let's kind of leave it down to that VXF, VO, and XHMQ or XMHQ. And really, if I go through across all of our factor ratings, everything's kind of in that average: stock concentration, sector concentration, yield, value ratings, growth ratings. The one that just glaringly stands out is XMHQ, has an above average, almost a high quality rating based on our look through analytics of the underlying companies, where the other two are either average or below average. And we'll get into this in performance, but as Athan mentioned, I really like that quality bent. It's nice to see a fund that has quality in its name play through to our purely rules-based analytics to show that it's above average on that quality rating. And from that perspective, where we're at in the market, I like clean balance sheets. So I'm going to give my winner from an exposure perspective, recognizing that they all do a good job capturing that mid-cap core space, to XMHQ, the Invesco S&P mid-cap quality ETF.
Got it. And I should have asked you earlier, judges, but maybe Mike can weigh in on quality, like what that means as a factor. I know it means different things to different index providers and firms, but generally speaking, what does quality mean when selecting equities?
Great question. And everybody has a little bit different take to it, but the types of analytics you'll see is return on equity. Do they have a higher return on equity than the market? Debt to equity, like looking at long-term debt on the balance sheet. Is it lower than the overall market? Do they have a cleaner balance sheet? Look at things like profit margins, net margins of the portfolio. Some folks will even go as far to look at the consistency of earnings. But all in all, the two that you really see in everybody's ratings is return on equity and long-term debt to equity, which is the primary two that we put into our component here at ETF Action. But that, when you hear quality, think cleanness of balance sheet, consistency of earnings, think higher margins in the overall market. Companies that are well established, and Morningstar might say moat, though I don't love that term. These are the types of companies you're going to look at.
Thank you for that added detail. That takes us next to performance. And Mike, you're still up, so break it down for us. How do these funds compare?
Yeah, so I mean, look, I think there's a clear winner in this category. You don't always get to say that, but in the environment we've been in, and it's been in this environment for a while, growth and quality have really stood out in the market cycle we've been in. And as a result, XMHQ has really crushed this cycle. If I look at it year to date, it's up 13.5%. The other funds range between 1.39 and 4.11. You know, if I look at 1 year, it's 25% versus the next best, which is VXF at 14%. And if I go all the way out to 10 years, three of these funds have a 10-year track record. You know, XMHQ as of last night had provided a 10-year annualized return of 11.52%. To put that in comparison, the S&P Midcap ETF, IJH, which I would consider a good benchmark for this category, is only up 8.88%. So nearly a 3% annualized outperformance. So big alpha numbers you're talking about, whereas the other products are pretty much right in line with the benchmark. Solid performance, nothing wrong with it, but there's a clear winner looking at a backwards basis. And as we've already kind of alluded to, I like quality still on a look forward basis, maybe not as much as I once did because they trade a lot richer than they did maybe 4 or 5 years ago. So maybe can't expect as much, but if you're thinking about just stay invested in clean names, I give this as a hands down winner to XMHQ.
Athan, you're up next for performance. How do you see it?
Yeah, that was really great. And the thing I want to mention about performance is in the first segment, we talked about costs, right? And XMHQ is the most expensive product. So say if you just went on that, you would have quickly screened out something that has more than overcome its fee difference in performance, right? So it's just something to always keep in mind that, yes, we want to gravitate towards the cheapest products, but when you sort of pull it back, this more than makes up for it. And to a lot of the same points that Mike has brought up, like even this year, you know, this midcap ETF has managed to pretty much match the S&P 500, which I think is a really tough feat when you're sort of small and midcap to try to even beat the large cap. So that in itself is very, very impressive. And even if you look at just midcaps in general, yes, they're up this year, but you're probably more than double what with the Invesco product than would have. But if you just want broad beta exposure to midcaps, I think, you know, VXF and VOO are fine. So some points that Mike was making, EQAL, it's just a equal weighted large cap. I feel like you probably already have that exposure, so I'd probably just quickly take that one out. But I think performance is a really, really clear winner here. I like the Invesco product. Just, you know, and this is where you can kind of see where the factors tend to stand out. Even though it has been tech that's helped it, you know, they've had exposure to super microcomputer and some AI stocks, but a lot of stuff that he was saying, I like quality. I still like it going forward. So I think I'm going to give this one to also XMHQ.
That takes us to our mystery battle category, where our judges could give us that surprise factor or thing that they think is pertinent to today's contest. So, Athan, what is your mystery battle category, and which of these ETFs wins it?
Yeah, this one's a little bit more qualitative, but just on kind of factor methodologies and you know, branding. I think Invesco does a really good job in this space. I know Vanguard doesn't quite do it as much. The smart beta stuff they tend to do is more kind of like the traditional Russell 1 value, Russell 1 growth. But I think when it comes to these sort of active, even though they're passive, the sort of these active like strategies and methodologies, I really, really like what Invesco is doing. And when it comes to that category, I think they're kind of the leaders in it. So I've always been impressed with their suite. But just sort of like on branding and factor loadings, and in that universe, I'm going to give this one to also XMHQ.
Mike, you're up next. What is your mystery battle category, and which of these 4 ETFs wins?
Yeah, you know, I'm going to go a little more nuanced today on my mystery category. I'm going to talk about the turnover within a product, the changing look-through analytics of a product. You know, if you look at 2 Vanguard products, they're really never going to change. If you look at EQAL, it will change with long market cycles, right? As the dynamics of the makeup of those 1,000 stocks changes, it'll change a little bit, but not really. What's only going to drive their changes is market movements, right? So if tech continues to outperform, tech will get a little bigger because of the way they're built. XMHQ is very different. It is actually looking for quality names, quality changes across securities, quality changes across sectors and industries. And if you were to take, and I can share this chart, if you were to take a look at the sector allocations for XMHQ over a 10-year market cycle, you'll be amazed at how much it jumps out on a rebalance perspective. For example, back in December, this product was 28% financials. It went through a rebalance and dropped to 8.9%, right? Financials didn't look as good on a quality screening basis, taking into account those fourth quarter 2022 earnings results and what happened with the banks. It turned out to be an excellent call, as we all know, going into 2023. It wasn't a call; it was a rule. But I think the idea of some of these strategies, if you're looking for a certain factor, a certain company doesn't always align to a certain factor. Things change, and part of that smart construct, that rebalancing construct, and I hate the word smart beta, but the idea of a factor strategy does adopt with market cycles and evolving beta. There you go. I like that. So I just think to that extent, my mystery category is, what is the difference between kind of a set it and forget it, let the market make your changes for you based on improvements, or a strategy that's a little bit more tactical in nature and is continually screening all of its eligible companies to see which one best align with that particular factor.
So which of these 4 ETFs, based on that criterion?
XMHQ.
Thank you, Mike. Now we've moved to the part of the show where our judges can give us their overall battle winner. You've heard the arguments, and they've been quite convincing. Mike, give us your overall winner.
So listen to all that. I'll give my winner to, wait for it, it's a big surprise, the Invesco quality mid-cap strategy, XMHQ. I like it a lot. I think factor strategies make a lot more sense down market or overseas in less tech-dominated mega-cap names. Part of the problem with anything factor-based with large cap right now is you're competing against market cap that own all of the Meg 7s, and the day's coming where it's going to change. But for the last 10 years, it's basically been a losing battle. That has not been the case in small mid-cap names. It hasn't been the case in emerging or international markets. So, using these factor strategies a little bit more outside of your core makes a lot of sense, and I like SMHQ.
Athan, your final chance to weigh in with your overall winner.
Yeah, I'm going to have to agree with Mike, all those points. I'm a big fan of the product. I like the quality tilt. I think VXF does a good job if you're just looking to cheap exposure to just finish off what you already don't have in the S&P 500. I think that's a great play too. But I think I like the differentiation, HMHQ. I like the quality tilt. I like the names it has. I like to Mike's points that it can be a little bit more dynamic than some of the other strategies. Even going forward, I think it's a pretty interesting play. So my overall pick is also going to be XMHQ.
Well, our judges have spoken, and according to our battle scorecard, today's winner is XMHQ from Invesco. Our judges agreed pretty much across the board. There's a large consensus in favor of that ETF, with the exception of cost. Vanguard won that category, but everything else in terms of exposure strategy, performance, mystery, and the overall battle winner, XMHQ was the winner. And as our judges pointed out, that quality factor has delivered some impressive historical results, despite the fact that this particular fund is focusing on smaller companies. And that's still, those smaller companies compared to the large mega caps have lagged, but still XMHQ has delivered some good results despite that dynamic. Also, the quality tilt, clean balance sheets, high return on equity, that is what investors have been favoring, and that's exactly the wheelhouse of type of companies that XMHQ is searching for. And again, dynamic versus static, that's what you're getting with a factor ETF that is constantly searching for stocks that fit that specific criterion. And it's ever evolving, it's ever changing. Whereas with static indexes, there's changes there, but to a lesser degree. And so our judges brought that out. Great job to both of you for breaking it down for us. Keep up the good work. Well done.
Yeah, always nice to see you guys.
Thanks, Ron. Great seeing you, Nathan.
Be sure to check out the description section below. I've got links to our judges. Some key takeaways for today's program: stop chasing mega caps and start investing in the next generation of mega caps, which are now mid and small cap companies. Wake up, people. Big thanks to Kep19901 for this episode's ETF battle suggestion. Good job, Kep. And my question to the rest of you: do you have a good matchup in mind that you'd like to see on the program? If so, send me your ETF ticker symbols in the comment section below or on our X feed at ETF Guide. I'm Ron DeLegge. Thanks for watching ETF Battles. We'll see you on the next episode.